financing can actually help with also citizen engagement as a part of it. So thanks for joining. Great. So I'm going to kick things off with just a couple of short slides and also a little bit of I guess, a disclaimer, just as we've done with previous ones, in that obviously it's best for you to use the most appropriate source of financing for your city, for your project. And this is supposed to be more of an informational piece for you. So hopefully you come out a lot more well informed, but also have a few connections that you can chat about citizen financing for the perspective of your city, and also discuss it with the Capital Hub and people here. So there's a lot of conversations, obviously, we've been having, and a lot of requests about citizen financing. So we're really pleased to be able to talk to you about it. But what I'll do is start off with a couple of definitions. So crowdfunding, in the way that we've been seeing it, is obviously looking at engaging citizens within the municipality to be a part of the fundraising effort. So whether this is a specific project that works with an entire crowdfunding piece, or whether as a component to be able to support it. And obviously, we're not going to discuss too much about cooperatives, but just to include what is in here, which is it's a business model of engaging a non-profit of community organizations where citizens can be a part of it. So really just to show that citizen financing comes in a couple of different angles, and looking at, it doesn't necessarily have to be individuals, it can also be groups, enterprises, or organizations pool the money together for one source. But I know that Koenraad and Sissy Windich have got a lot more experience with this, and the same with Matthew, who can actually go into a little bit more of the practicalities of how that looks. If we go to the next slide, the way that we've seen it defined and we've seen it in action is obviously in four key ways. So donation-based, reward-based, loan-based, and equity-based. So what we've got here is it shows that it uses a sort of digital web-based investment platforms to pool monies from individuals through four key different investment types. So the donation-based is where you expect citizens to donate money as a part of the project. And this can be, as has been done in Rotterdam, where a bridge was created, and I'll be happy to link that afterwards, and the names of the people who had donated were on the bridge. It can also be done with stadiums as a part of a sports team. And I guess the idea here is that it's more in cases where there are limited financial reward. And rewards-based, and this is things like Kickstarter, it's been used as a sort of way of giving non-financial rewards as a part of it. But then there are two key pieces as well, which is the loan-based and the equity-based, where people can actually receive an income from it or be part of the upside of the whole piece, which is part of the engagement of the citizen engagement that we keep talking about. So if we go to the next slide, just to show you how we see it happening in practicality, but obviously we'll cover that in a bit more detail throughout the course of this thing. But really what we've seen in different methods and different platforms is that there's always a sort of general process that can be followed, where contracts are made, between the project developer and the crowdfunding platform. The projects are listed online so people are able to see it, and they can actually engage with what the details are behind it, and some of the description, the life cycle, the timeline. The fundraising campaign is kicked off, shown to people so that there are updates and reports for the project, and then people pledge the amount that they want to contribute towards it. And this is then up to a certain goal. Oftentimes within equity investments, there's actually people have to come with a certain amount of money beforehand. But this then enables the implementation phase of the project and kicking it off. And I guess what I think we consider, and obviously the Capital Hub is here to look at the innovative side of finance, is that there are a lot of projects that we're seeing which don't necessarily have the background, who don't necessarily have the key amounts of data. And this would be one way of looking at first of a kind, folk projects, which don't necessarily have the same sort of background, or don't necessarily have, or are much more innovative to be able to engage citizens in the process and get them to understand a part of it as well. So I think hopefully we can cover that up, and actually we can, I guess, demystify a little bit of the key pieces of the citizen financing. So I won't take up any more of the time from my side, just to say welcome here, and thanks everyone for joining, and I'll pass on to our next speaker.
Sure. Thank you, Harry, for that introduction. Really pleased everyone could be here today to learn about crowdfunding. We have a very nice lineup of Koenraad de Vries and Sissy Windich. both veterans in crowdfunding at many different scales and infrastructure types. So really excited to transfer that knowledge to you all today. I work at Metabolic. I'm the head of sustainable finance, but before that life, I actually created an equity crowdfunding platform in the United States. It was the first one focused on climate projects. And so we worked with a variety of instrument types, debt, equity of different tenor and different positions on the capital stack. Often the cities were very excited and they would approach us. But it's very complex from a regulatory perspective of which parties can issue what money on different types of crowdfunding platforms, as Harry alluded to. But what I think is really important to mention is that, we talk a lot about blended finance and public-private partnerships. So with blended finance, we can bring in and mobilize a variety of capital. Typically, we think of philanthropy or government providing that blended finance, but you could also imagine donation-based crowdfunding as a mechanism to do that as well. And the second piece I'll add about public-private partnerships is often we think of these as large cities with large contracting and engineering firms, but you could just as easily imagine a public-private partnership with a cooperative. And so I just plant those seeds because we hear a lot about these two topics, and crowdfunding is an important part of the capital stack for a lot of projects that wouldn't be built otherwise. And so I'll leave the introduction there and pass it over to Koenraad de Vries to go through crowdfunding basics and a few different case studies from his experience.
Okay, thank you, Matthew, and thank you, Harry, for the introduction. My name is Koenraad de Vries. I'm one of the founders of Start Green Capital, which is an investment firm in the Netherlands. We finance early stage companies and early stage energy projects, and we also launched in 2012, so almost 12 years ago, a crowdfunding platform in the Netherlands called One Planet Crowd, which later on has merged with Investor, which I'll explain more about in the next slide. But for this, to get everybody on the same page on crowdfunding, I mean, yes, it is an innovative finance form, but it is also already here for 12 years. So it's also a proven finance form. And I think if you look to financial innovation, 12 years not even that long. So it always takes a while before you can really perform in this new finance form. Let me just close one window here because it's a lot of noise. Sorry for that. So the basics for crowdfunding is that you have funds and you have a crowd, and as you can see here in the picture, actually it's not that really different. The only difference is that you leave the entity in between out. So crowdfunding is a direct form of investment where the individual, household, or company can really directly invest in companies and also therefore build up a portfolio. Which makes it a really strong model to get people involved because it's direct. So in a way, it's helping you. The platform is helping you to make your choice. It gives you the information, gives you opportunity to select the companies you want. And but in the other way, if you have a fund in between, then it's of course up to the fund manager who decides in which company you would invest, and also in what for portfolio you have. So in our proposition, crowdfunding is your flexible model where you can choose your own portfolio. And that way, it's all what you have selected for. The flip side of that is, of course, if you do it, you need more to invest yourself a bit, because you have to choose yourself. So I was always compared a bit with, if you go traveling, you could have the all-in package. So you could go to a travel agency and ask, hey, I want to go to Rome, and then they fix everything for you: the flight, the hotel, the taxi, and everything you want to see there. That's more a way the fund will do it. So you pay something for it, but everything is arranged. If you do crowdfunding, you can select the different parts yourself. So you can say, I do my own hotel, I check my own flight, or train, or whatever I want. So that's the difference for me between crowdfunding and funding. And because it's direct, it helps you to engage. Maybe to the next slide, because I'm not in control of slides. So, yeah, thank you. So as I told, Start Green, we started actually in 2006. So we are 18 years now in the early investing market, as you can call it, with venture capital and energy project finance. We launched One Planet Crowd in 2012, and last year we merged it with Investor, which was then already an European player. That's actually for origin a Finnish-German platform, Finnish-German-Austria. So we stepped in, and now we have 3 regions where we can finance either the Benelux, the DACH countries, and also the Nordics. The reason that we merged, I think it's also important for the audience we have now, is because last year in November, the new crowdfunding regulation, the ACPRP, became mandatory. So ESMA has made this new regulation, which is a directive. So all the regulators have to apply it also in the separate European countries, which means that there's one European market now. And I think this is really great because in a way to get Europe more competitive to the US or Asia sorry, Matthew, I've now lost the presentation, so that goes well.
Sorry about that.
No problem, I will continue. But to make Europe more competitive, and also the access to finance for SMEs and venture capital, the ESMA made this law together with the European Commission, which means that if you have the European license, which we have, and also a few other larger platforms, you can actually invite all European citizens to invest in the platforms or the projects you are launching, which of course makes it really scalable to do larger projects. Even so you could invite, for instance, if you do citizens finance, you could invite all the people in Paris, but you could also invite people around or even outside Paris or even outside France. So we are, as Investor, one of the largest investment platforms in Europe. We have already almost 500 million pledged with 200,000 investors. Returns are approximately an average on 6.6%. So it's also a good investment opportunity if you do really diversify it. Which is, it says here 900, but I think we already did 1,000 projects. A bit old information, I think, but that's okay. So we did a lot of projects and ventures if you combine all the groups. And we are licensed by the Dutch financial authorities and the Dutch bank, and with the European license. We also have a MiFID II license. So to get this comparable, if you do a finance round till 5 million, you can do it under the crowdfunding law. If you want to go above, you need to make a prospectus, and then you need the MiFID II license, which we are also applicable to. And we are a B Corp, because we are, of course, sustainability. Yeah. Well, now back to the subject. What can you do with crowdfunding and engagement and financing of energy infrastructure? I see some questions coming in. Which would I do that direct or at the end of the presentation? What would be the ideal form?
Let's collect all the questions. Keep asking them as they come up, no matter how trivial it seems for you. If it's about your city or individual projects, put them in the chat, and we'll get to them towards the end. So keep the questions coming, and then we'll answer them at the end. Thank you.
Okay. So what we have experienced last 12 years, that the amount of crowdfunding has really increased. I mean, in the early days, we thought 20,000 euros is a large amount. We only to keep some, but like I said, there's more forms of crowdfunding, like donation, reward, crowdfunding, loans, and investments. We only do loans and investments. So we were already in a larger part, but for us, it's now normal to raise 2 to 5 million per project. And like I explain at the end as an example, we raised 26 million for a wind farm in the north of the Netherlands to involve the citizens there. So what can it do? It can be more than engagement. It can also be a really serious finance form. I think that's something not everybody's aware of, but there's a lot of money in private hands, especially in the north of Europe. I mean, the Netherlands and the Nordics and Germany, there's still a lot of savings in private hands, and people like to finance things they think are important and where they can have also a good financial return. So it's more than an engagement tool or a sort of. It's also simply a strong way to finance projects. It's flexible because you can in the crowdfunding law, you can either have really early stage capital, and then of course you have to give a better return, but that's the role of the platform to make the best risk return assessment. But you could also finance long-term debt. We financed a few projects on 10 to 50 year duration. So in notes, so that's also possible. It's also a way to have citizens build in wealth, and be part of the wealth would otherwise go to, say, the investors from outside. So I always say, if you have a big wind farm and you can be partly owner of this wind farm, you have good returns. And if you will not be part of the wind farm, then you have all the trouble because the wind farm is in your neighborhood or in your way of looking, or you have some inconvenience of the wind farm, and then all the money also goes to some sort of investment firm outside your company. Then you have of course a double rotation. So it's also a way to have direct connection and also be part of the money which is made in sustainable energy also. What we see, I'm now to the fourth bullet, is that more and more in the Netherlands, I'm not sure how it's in all other countries in Europe, but more citizens and local governments are actually adding public participation, either by crowdfunding or energy cooperation, as a part of a tender, as a way to say, hey, if you want to do this project, you should at least find also a financial way to engage the environment. So that's also, we will come back to that later, the interest is also really important to make sure that it even is happening. Because if you not make it part of a tender, then in a way the commercial project developers will, as it goes, not easily share their wallet with the crowd and the wealth. They will not. It should be incentive, or at least be an obligation or a mandatory that they should share that also in their public tenders. It's good for multiple assets. I mean, it can be energy initiative, but it can also be for housing. I think it can also be used for public transport. I don't have an example for that, but if you have a small line of public transport which is also something which is really in the connection and use of the local environment, that could also be a way to finance locally. Okay, then we get to the case study. This is of course in Dutch, so it says here, ga voor de wind. You don't have to pronounce it. It says go for the wind. It's a wind farm in the northern Netherlands, in the province of Friesland, which is a department in the Netherlands, where they already built this wind farm. So it was already active for 4 years. But it was with the obligation for the builder, the project developer, to at least place 10 million locally. So 10 million should be raised in bonds by the local the people living in the apartment of Friesland. And actually, we were really amazed because 10 million is a big amount, but we not raised 10 million, we raised 27 million. So we raised 2.5 times more than we needed with this participation. And this says something about it also said something about the financial product. This is a good financial product, and the wind farm is already in use. So there was a lot of migration of de-risking already there because it's a working park. But it also says something about the willingness of people to get involved in the sustainable energy infrastructure finance, as we see it. And to make sure that, the whole goal of the crowdfunding campaign was to get as much people involved as possible. So what we will do is we diversify the bonds in so much more people as possible. So the money will go back to 10 million, and then it will be diversified to as much citizens as possible. So like I said, maximum 10 million in an equal distribution model. So if you have pledged 100,000, with if you have done, then you don't get 100,000, you get the distribution of the amount of bonds, which is, so they could share it at most possible on much citizen. It was the minimum price 500 euros per bond. maximum 500,000. But if you would do it, you would, in this model, a lot of your money will be placed back. 7% interest, 5-year tenor. There were no securities in the way that, like most wind farms, there were securities because all the Dutch wind farms are actually subsidized by the Dutch government. So there's a cash flow security on the production of energy, but there's no security on the wind farm or the windmills themselves. But I don't think that gives you also much security. The repayment is just in 10 repayments, linear, and the security, there's no security on payment in the sense of legally, but like I said, the park was already functioning for 4 years, so it was totally de-risked in a way of the subsidy scheme and the grants of the Dutch government. We did a large campaign, so all the people in Friesland would have seen it somehow by, advertising, small media, but also some events we organized, and even local television and posters in public places. So this is an example of a large public financed project. The other one is the Bomhofsplas, which is a floating solar project. This is actually also, it looks like a lake, but it's actually, I'm looking for the word, grindafgraving. It's like a sand pit where they win sand and for building. So it's like a it's like not used water. It's actually still in production also, because what you can see here is that on the left side there's still a production of the pit. So people are still quarry. Thank you. It's a quarry pit. So people are still winning here the materials. And because it's there and you don't want to have interference with the land on too much solar, we used it for a floating solar park. And the nice thing about the Bomhofsplas that we actually did it together with Energy Corporation, I say it here, the cooperative finance movement, because I think crowdfunding and the corporate finance movement could really work together, because most crowdfunding platforms are professionally skilled. They have invested a lot of money, as we did, in IT, legal, governance, payment, know your customer, all the things you should do as a financial institute. And the cooperative usually has all the experience around, making a project happen, project development, get local involvement. So we are more and more asked to help cooperative finance corporations to finance their part, and that's what we also have done in this project, Bomhofsplas. So we were asked to, at first, ask all the cooperative members, and then later on we also were asked to make a circle around the city, and to invite also the people who were living around, because the corporate members were of course also living around, but then you make a larger circle around the project. And another thing is that we also used the regional development fund here to also help in the beginning part of the project to get it financed, and to get all the citizen certificates, because everybody has to own a part of the project. We used the STAC, which is like a trust legal structure in Netherlands, where you can distinguish between local or economic ownership and financial ownership. So the financial ownership is going to the participants, of course, and the legal ownership is owned by the corporation. So you have one voice at the table, the cooperative structure, which makes it more practical to manage. But it's a bit of a Dutch model, but I think in each European country you could set up these sort of trust models for combining voting rights to one legal cooperative movement or entity. To give a bit of insight, how was the finance structure done? So it started with equity, which done by the cooperative regional finance fund, which is the fund Energy Fund Overijssel. Then One Planet Crowd steps in. So together with the local participation, we bought the project, and then later on we asked for a senior debt, and this is all, of course, structured in one model. So it's actually, you can see that the equity in the unit loan part actually enhanced or increased the senior debt model. to get this project going. Yeah, maybe I saw a few questions. I can go into there now. What would you of late after Sissy? What would be the
Yeah, let's have Sissy go, and then let's do all the questions in one blush.
Yeah.
Sissy, are you here? Are you ready to go? Just checking to see.
Sissy, I can't see Sissy in the call.
Why don't we take some of the questions and we can try and track her down in the meantime?
Sure. So Koenraad, Naumer from Dijon Metropole asked if the platforms deal with the fiscal obligations according to each country. Does each investor know how much income they have to pay? I'm not quite sure if I follow that, Naumer. So if you wouldn't mind maybe going off mute and clarifying your question. Okay.
But I can elaborate a bit on it if I get it right, the question. I mean, I think in general, the European regulation makes it possible to have one platform legally to offer as an issuer. So we can, each company is an issuer, and we can offer the financial product to the several country states in Europe. So that's super great. But of course, there are physical differences between the countries. So, for instance, in Germany, it's different than the Netherlands, and also in Finland or in Austria. So, one of the big challenges we had in our European platform is to get the taxation right. So, maybe that's the question. So, the taxation is done per European country. And also, so not only if necessary, some countries, they ask you to directly deduct the taxation. In Netherlands, that's not the case, but I thought it's in Germany the case. I'm not sure, but a difference. And what we do in the Netherlands, we provide our customers a fiscal overview each year, so they can use that for their own fiscal. If I say that for their own fiscal year, and bring this have form to the government. I hope this answers the question. But so the taxation difference in each European country. That's always probably Europe. You're getting one Europe in all elements is difficult.
Okay, thank you. And let's see, we have the next question is, what is the span of return between different projects?
The span of return in financial sense is that it really depends on the financial product you're offering. So I think the role of the platform should be that we assess what is the risk return ratio which is reasonable. So for instance, if you would have a straight equity project finance, then the risk is high. So then the returns should also be higher than a normal loan. If it's a bond on a de-risked park, like in Friesland, then you could have lower interest rates, where I think the 7.5% of the wind park Friesland was actually really high, but that's also because they really want to incentivize more citizen involvement. If you look at financially, it could have been a bit lower than 7.5%. So it's the spread is depending on the financial product. So for equity, but we always say the crowd should have the same. Should have the same financial offering as a professional venture capitalist or loan provider should have. That's why we are in between. The only difference we make is that we separate it in small parts and offer it to the public. But in essence, the financial offering should be the same.
Okay, great. Thank you. And I have a question here from Mikhail Edelstam about, it looks like the composition of the investors on different types of projects. So what kind of projects get what different groups of stakeholders or citizens that invest?
I think in general, still the age of the investor is a bit higher than the average citizen living around the park, but it's simply because people with which are a little older have also a bit more money. That's the situation which is all around in investing. But we attract more younger people than most financial funds do. If we compare it to, say, a normal investment fund or a saving bank. And that's also because in our platform, you can usually already finance after 500 or 250 euros. So it's doable for a lot of people, but not students, or people which are somewhere below 20. They usually will not finance because they can also not diversify. So in general, the SA vanaf 35, 40, and use it as a way to diversify their investment portfolio.
Great, great. And what about, let's say, geographic dispersion or investment sizes?
How do you mean that, Matthew? In the sense of
I mean, what kind of range of investment sizes do you get, and are they typically, close to the region, or are people from all over the country?
Yeah, actually, we are more and more amazed by the large amount we are getting in. So for Windpark Friesland, we received a lot of people doing 50,000 euros. And it's not that regional bound. So it's more that if you look on average, also a lot of people do 250 or 500 euros. So the average doesn't say a lot. You should really look into the in the diversion of the amounts. But in general, I think if you look to our portfolio and the projects people can invest in also from other countries, we see more and more people, and that's also our advice, diversify in smaller amounts. So, in general, our advice is the 10 out of 10 rule. That means that you should not invest more than 10% of your free savings into crowdfunding because it's still higher risk and also liquidity is low. Hey, you're in that for the duration. That's the first 10%. And the second 10% is that we always advise to do more than 10 projects. So diversify your money at least over 10 projects, if possible. You're on mute, Matthew.
Okay, 2024. I still start talking without unmuting.
Yeah.
Bob, we have a great question from Bob. Bob, do you want me to read it, or would you like to ask it directly?
Well, you can read it, or I can ask directly.
Please, please go ahead.
Okay, so there's always let's say a tension between, on the one hand, the dividends as a cooperative that you hand out, or on the other hand, the lower electricity prices, especially in Belgium, one of the selling models of cooperatives. Of course, this is within the context where EcoPower is also a deliverable, is also leverancier of a distributor, sorry, of electricity. So the benefit there is that the cooperative actually decides to keep the prices low, but then also the dividends are lower. So how do you relate in your projects where this balance is? And what we've noticed in cooperatives in Belgium, at least, is that this depends to the underlying structure of who decides what in this cooperative. So either whether it is structured on the principle of one person, one vote, or on the other hand of one share, one vote. And so this balance, I would love to hear from you what the pros and cons are for moving capital, and the profile it ends up like putting on the market. And I hope it's clear enough, but if not, please ask for further questions.
Yeah, I think I can understand the question. I mean, I think we you have to see the platform is it's like an exchange. So we are the professional supplier to make sure that the financial product is offered in the correct form, the right form to the market. So it's up to the cooperative to decide what they should do with the dividends. So we hardly have any interference there. The only thing we look at, okay, if you want to finance this energy project or this wind farm or this floating solar park, we will sit down together with the bank, because somebody has to put the large amount at the table, which is usually the bank. So they provide the senior debt for say 70% of the project, if it is a solar field, or 60% nowadays. And the other 40% will be some junior debt, which we can do with crowdfunding. And we could also do the equity part for the cooperative, but then we will tell what they want to do with the dividend. So if they say, listen, we only want to provide a maximum, but I've seen a lot in Netherlands, a maximum of 10% dividend, and the rest will be used for regional development, that's fine by us. As long as it's transparent and we can tell how it works. So we don't, we look at if it's reasonable, logical, and understandable, but it's for the cooperative to make their own offer if we help them.
Yeah, I think it's a really good point that Bob brought up, which is, you can, it's all about the return profiles of the project, right? I mean, you can give someone a 10% discount. Like if a project has 8% return, you could give the electricity purchasers a 20% discount, but it might push the project down to a 5% return, right? And then the question is, will people actually invest in it or not? So I think
we could advise that bit. I mean, if you say you only offer 2% on a high risky part, I would say, you could do it. And if you tell it transparent, it's not a wrong choice, but you will probably not raise a lot of money. But there's also a bit of the balance between, is you offering attractive in comparison to your financial offer. And I think the Friesland Park was really attractive, maybe a bit too attractive if you look at it now, but that's fine because they now raised 10 million. But you could also go the other way around. And if you go really low, and nowadays the savings are better than it used to be. And if you go below 3%, for instance, below a state bond, it's really difficult to raise money in a large amount. So it's up to the cooperative to decide it. I think the role of the platform should be to make it professional, that all the stuff is there. So all the information, the information sheets, the know your customer, the money lending, the ALM, anti-money laundering law, and these sort of elements are all well taken care of.
Yes, and I'll just do a brief plug for the Mission Cities Capital Hub. This is exactly the types of things that we would provide technical support for, as well as the crowdfunding platforms themselves. I see a question. Are there any pros or cons having a certain type of anchor investor? An anchor investor could be a municipality or an ESCO or a private company. Have you seen this to be effective, or what are the pros and cons?
Yeah, I think in any finance route, having professional anchor investors is a pro. I mean, usually we have the bank in there, because we most what you do is including bank finance. But if the municipality will also step in or give some sort of guarantee, we also done a few projects where the government only provides a guarantee, so don't have to pay the money, but has some sort of collateral or guarantee scheme, is of course really helping the successful launch of these sort of larger finance rounds. And if you look for Wind Park Friesland, for instance, the government has actually financed the first step to development of the park, and they have put in the tender, so the project developer was obliged or has the mandatory requirement to place the money. So there's also a role where the governments could help. You're muting, man. It's the system, I think, that says you're mute.
Oh, okay. Well, great. So we don't have Sissy with us today, but I think it's at least worthwhile to highlight some of the case studies that she presented to show the variety of impacts that could be had with crowdfunding. This isn't just donations, it's not just charity, but there's a wide variety of getting involved. So as you can see in Berlin, they used crowdfunding for a combined heat and power project and raised $500,000 at a 6% interest. This is, of course, market rate returns or better. So although there's more risk, it's also important to note that, again, this is an attractive investment opportunity. It's not asking people to take losses, and there's a certain risk premium that's for the return. And a project like this is very important in my eyes because, when parents and teachers finance it, it's just like a bake sale or something, right? But the school could be paying anyone for electricity. They could be paying anyone for heat. And instead, when the citizens own it, the school is actually paying the teachers and the parents. And that is a really powerful model. And does a lot more for the community than just provide a 6% return. Another great project, again, with solar, approximately 350,000 was added via a Belgian crowdfunding platform. And again, this was done with a municipality-led cooperative company. And it facilitated helped facilitate the initial project, as well as ultimately building on a second phase involving battery storage and efficiency. And I think that's, again, showing how flexible crowdfunding can be. It's really... You can use it in very custom ways. So working with a municipality or a cooperative, if you say, well, I want a 2-year note at 7%, okay, great, you can issue that. Whether people pay it or not remains to be seen, but you can design very custom instruments. And there's a lot of flexibilities on the terms and conditions, the repayment periods, the dividend structures, and the developer often in traditional models can only take what is given to them, right? Whereas in crowdfunding, the developer can tell the market what it wants, what makes the project work. And so if people want it to exist, there's a lot of flexibility for developers to design these very custom securities that they wouldn't be able to get on a more general market. I can't speak to this. This is the capital stack, and there's some German in here, so we'll have to leave that to our German colleagues to enjoy. But it looks like, yeah, I'm not even going to pretend like I speak German. So I'll leave that for the folks who can read German.
You can explain if you want, Mitchell, because it's Dutch.
Okay. Oh, it is Dutch. Oh, it is Dutch. Oh, it's Dutch. Okay, that's okay. Go ahead.
I'm reading glasses. I can read this, but I think it says 20% are brought in by the crowd lending, and or even 30%, 70% by the bank loan, which is also a normal ratio we see in the Dutch market, 30-70. So that's the funny thing. In most projects, you can cooperate with the banks in a ratio.
Yep. Great. Okay. Well, very interesting. And let's see here. So I'm going to kind of start to wrap it up because I know I want to leave time for questions, either project specific, country specific, crowdfunding specific questions, but just wanted to kind of close with a bit of best practices and practical tips. The caveat being, I am not a lawyer. This is not financial advice. This is not investment advice, and really just a place to start looking and thinking about projects. And, it's important to note that unless you're talking about something like donation crowdfunding, and often even with donation crowdfunding, cities are not usually the direct issuers. And the reason for this is because cities can issue bonds. And so often the crowdfunding amounts, as Kunrad mentioned, under 5 million, doesn't really make sense for the city per se. And so often the cities will partner with a developer, or that could be a cooperative. And the city then either has a share or helps influence or is advising the developer as they construct, develop, construct, and operate the asset. And as Kunrad was hinting to, cooperatives can raise funding from members and local residents without needing to establish a separate entity. And some considerations around separate entities: it shouldn't qualify as a special purpose vehicle. And this is something you want to bring your city lawyers into, because you know, when you're talking about investment or either equity or debt, crowdfunding, these are actual securities on the marketplace that are regulated. So there is a lot of legal considerations that have to be addressed and discussed. The platforms like Coonrod or any of the other platforms out there can sit and discuss this with you. And it's something that you'll work on together as you conceive your offering. And typically, you know, the project should be somewhat far along before engaging in those conversations, right? And this is a nice way that cities can bring projects to the Capital Hub. The Capital Hub can kind of move them from concept to pre-development stage. And so then they would be in a nice package form, ready to bring a platform to discuss those different options. And so, just a few more examples. Space Hive, these are in the United Kingdom, which is part of Net Zero Cities. There are some UK cities. Space Hive is a donation-based platform that works with UK councils, and Abundance Investment is working with Southwark UK to invest in local projects. So please do take a look at those references if you're working in UK cities or have colleagues in that area. So we've touched on a little bit of the questions and discussions. Oh, and I see Sissy now joining. So Sissy, I kind of we presented your slides, but if there are anything you'd want to say in context or anything from your experience, we'd love to have you speak. Oh, and you're on mute. I'm sorry, I did it twice today too.
Apologies, I got the invitation an hour late. I think I was planning for an hour later. So apologies for being late. Yes, I was just talking from my experience. So previously I worked at Better West, where we financed a school, and you already presented the slide. I think what's interesting to highlight here are the benefits also in terms of education, because you really engage the people by having the pupils and the teacher co-investing. And furthermore, it was financed via contracting. I'm not sure it is still active now as a good viable model, but the contracting model also eased the workload of the school and the municipalities. I think that's important to know. It's maintenance, it's financing, it's also ongoing operations. So I think this is a very important point to highlight. And then the second one is where we currently work. So I moved on. I work for energy communities now, a company helping set up, run and operate them actually. And we have a current project in Belgium, where which is also a good example because it's a couple of smaller municipalities joining together to actually finance a larger scale ambition and make it actually efficient and viable. So it's quite a large ambition, and then they broke it down from the 360 megawatt, broke it down into the first phase of 3 megawatt, which is only the municipality building roofs, which is also quite interesting because it's something you can do faster, which is feasible. And where we as a subcontractor, we do the energy sharing part. So we're a subcontractor of Belfius. Where you have two parts. So it's really about citizen engagement, not only financially, but also seeing it on your energy bill. So it's going a level deeper. Here I presented the Econova, which is a platform, and how they structured the deal. Again, I think it's a common model we discussed before, where you have the traditional bank loan from Belfius. And then the Econova is actually between own equity and the bank loan in terms of subordination. Also important to note, the motive was not access to finance. It was really about citizen engagement, because the crowdfunding price is actually higher than the loan from the bank. And they started with a cooperative. And then due to the implementation phase, which was difficult, they then moved on to crowdfunding, and it was quite a feasible and good solution. And we are the subcontractor with Belfius throughout Belgium now, so that we actually, the whole, which is also interesting here, because the whole setup, project management takes quite a time, for the municipalities. It's a big workload to structure the deal. And so we try to find a replicable model where we can actually scale it up pretty fast all over Belgium to do the technical feasibility and the implementation phase. And crowdfunding was a good feasible option. So it was faster than getting the corporate shares. And the energy sharing is actually ensuring that it's real, you know. So yeah, so
Great.
any questions? Because it's just my experience.
Yeah, we have a question in the chat. Maybe you can take this one. Get Koenraad off the hot seat here.
Sure.
Marth asked, does different stages of maturity of projects have different preferred investor and funding methods and returns?
Absolutely. So crowdfunding covers a whole range of stages of project finance. And usually you could say the riskier, the more expensive it becomes. In this particular case, particularly the last one, the risk is very low. So the credit risk is low because it's owned by the municipality. And also you have the bank loan and you have the energy, you have the assets underlying. So it's actually lower, but you can have different stages. In particular, when it comes to real estate crowdfunding, also when it's labeled eco, you really have to understand what's behind it. Are you actually financing the asset? Are you financing the loan? Or are you financing the own equity part of getting as a security for the bank loan? So there are a lot of real estate you see online at the moment, for example. You don't have an asset as a collateral, but you're actually substituting, it's a 20% own equity of the project developer. And here the default risk is the highest. And also the monetary risk is the highest. So the same type of project can have completely different risk depending on the development stage. It's very, very important. So the other one, for example, the school, your biggest risk was the default risk of the ESCO. Yeah, so just to be clear.
Great. Thank you, Sissy. This isn't a question, but for folks interested, Bob presented an example of how dividends from one project could have a cascading effect into other projects. So that's a very good reference. Do folks, other cities have additional questions? I have a question, but I want to give opportunities to other cities. If that's about a specific project or about a specific circumstance, please feel free to ask whatever questions you have. And maybe I'll ask while people queue up a question. Koenraad, you mentioned earlier that, there was kind of this $5 million threshold, for crowdfunding. Could you talk about projects smaller than that and bigger than that? I mean, how big could crowdfunding go, and what kind of trends, or do you think will happen over the next few years in terms of crowdfunding amounts and sizes, cost of capital, or anything like this?
I think the whole industry will professionalize really quick now, because there's a European regulation, which means that there's the ESMA and the local regulatory entities are looking into crowdfunding. It's now here for 10 or 12 years in our case. It means that platforms, the earliest platforms, can also show returns. It takes a while before you can bring money back to your investor. So you can see also what the track record is from platforms. And if you look at it, my example in the beginning of this presentation about the travel market, I mean, everybody's now used to arrange their own travel arrangement, right? I mean, we book our own flights, and we have platforms for that. So we go to platforms to book our flights. We go to platforms to find the best hotels. So I think in the platform economy, crowdfunding can be really big, and can be also really beneficial for governments, because I always say, if you look to the Dutch government, which I know the best, we have 360 billion in savings in individual households, which is a massive amount of money, which is still there. So if you can offer a right financial structure, you could, and you ask, if you say we ask 10% of that, but because we say no more than 10%, then it's still 36 billion to invest. So I think people would like to invest if the financial regulatory government bodies also help them there with good structures. The only thing I would say is a bit of pitfall is that, to be honest, is that even in the Netherlands, where crowdfunding is larger than in most European countries, but still the government always looks at banks. So in their policy making, in their thinking is always, okay, but can we make this guarantee scheme? Can we make this model for a bank? And I always say, why only for the bank? You can also make it for the platforms which have the regulatory permit, which you have already tested. So even there, we still have to tell them the powerfulness of crowdfunding. But I think, like most financial instrument, it goes step by step, but this can be really large because in the end, it's more efficient. It's you as an individual financing directly to a platform into a company or a project. So you also skip the middleman, which is lower cost.
Thank you for those closing comments and insights. Koenraad, I'll pass it back to Harry to close us out.
Yeah, just to say thanks very much for everyone for joining. I know that it was I learned a lot of people are very interested in this sort of particular method for raising capital. So thanks very much for getting on board. If you are interested, I know that we're going to be launching for a city facing our capital hub in Valencia at the end of June. Any builder, pass on questions to your city advisors, pass on questions here, and then also get in touch with our speakers if you want anything direct as well. So thanks very much for joining, and hopefully this has been informative for everyone.
Okay, thank you, everyone.
Thank you all for the opportunities. Yep.